Hello everybody and welcome back to another video. In today's video we discuss everything to do with the stock, commodities and crypto markets right now, and it's been a wild 24 hours with some big swings. The problem is it may not be over yet because guess what? Everything is rejecting in these markets. Does the Fed have a sneaky plan, and is it all about volatility to try to combat inflation? We'll be talking about that and more, plus the key levels that you need to be looking at in today's video. Speak to you soon. Well, welcome back to our market recap for the markets closed 17th of February 2022. And if you like anything to do with stock, commodities, or crypto, remember to subscribe and smash that like button if you end up enjoying the video. It was frankly a bloodbath on the session and everything went down in the growth sectors. You'll notice staples held up, which is a defensive sector in itself, but things like NVDA fell hard. And you might be scratching your head and asking the question, how is that possible with such a great earnings season? Well, a lot of it comes down to understanding the expectations, but also understanding the price action. And we talk about that throughout these week's videos. We actually did a special on NVIDIA and why we suspected this may occur. And of course, we've talked a lot about the general expense in the market. Remember, fundamentals suddenly matter more than they did 2 years ago or even 1 year ago. Let's talk about household mortgage debt because many of you are probably freaking out right now about the stock markets. And you might say, Tom, what has this got to do with anything? Well, it has to do with a lot. We know a lot of crashes do get formed through bubbles in this particular area, being household. And we haven't actually seen that rising here in the US for some time, ever since the global financial crisis. It's rising in other countries, but not the US. And it brings me up to my biggest discussion point today. And this comes from reports that have been sent out to private, large investors and big equity firms and companies throughout, of course, the big bank networks. And basically it's talking about what is the Fed going to do about this persistent inflation problem. They've got two choices. Of course, raise the rates and try to stop it. But then if they do that, they may actually end up killing some of the things that they want, such as wage growth, etc. So what is the better course of action for them? Well, of course, they're going to have to raise rates. But one of the best courses of action for the Fed to take is actually to increase volatility in the markets. And these documents really dictate and kind of discuss this fact that it isn't really an asset problem here in terms of debt. The markets could fall anywhere from where they are now down another 10, 15%. And it wouldn't really affect necessarily the economy so much. Remember, wage growth will counter some of the losses there. And that's the thing, it's growing at 5% at the moment. So this argument, I think, is paramount to what we're seeing. Increased volatility, fear coming into the market, which puts a dampening on people's FOMO. And I think that's what we're going to continue to see here for 2022. Let me know if you agree with that. Of course, we'll go into more detail on our weekend video, but it is an interesting point. Here's what we saw for the session. So basically all of the indices were down. We saw the Dow, the SP500, Russell and Nasdaq all falling through the back end. And I think that's the important thing. They were falling into the close. Wall Street was selling these and the Nasdaq fell as much as 3% on the session, which is a pretty extreme fall. We've seen a lot of this in the recent weeks. Now, which sector was doing the best? Well, I've got to say congratulations to people that were looking at gold because yes, we've been covering that now incredibly heavily for a little while and it really is coming back to, I guess, bite people that didn't believe in it. And it's not that gold is the best investment asset class out there, it really isn't. But when you know things are moving and it starts to improve on the technical side, gold can be pretty phenomenal. And of course, it is partially, for a time being anyway, a hedge against uncertainty in the market. It was up 3.73. We'll talk about that later. Defensives were up, again showing there could be further selling to come because XLP and XLU, which is utilities and staples, were both up and everything else was down. Semiconductors leading the charge down, pretty much led by NVIDIA in some ways. Let's talk about seasonality just to go on with this idea of the Fed creating volatility in the market to get rid of a bit of the FOMO and to slow things down. If they're able to do that, and there are certain ways they already are doing it, because look what's happening on the markets, let's think about the rest of the year. And we've kind of argued there's two dips here due to it being a midterm election year. And I'll just quickly follow up here. We've got basically some sideways action right now to down, of course, which is what you expect in these periods. And then we get that small resurgence through the middle of the year and a very good chance of a double dip later on, which should be followed up by some amazing seasonality plays if you're able to do it. So I think don't lose sight of the long-term picture. If the Fed is able to control the markets partially here through this idea of volatility, and we see everything calm down, and more importantly, one specific thing not happening with yields, because if something does happen, we have to be scared, then it will be a miraculous recovery, and most likely this fact from 70 years worth of data will come true. Q4, Q1, and Q2 of next year, so Q4 of this year into those, could be phenomenal times to be an investor and traders in the market. So we talked about what we don't want to see, and really that answer is some kind of yield inversion. You haven't seen this for a long time. Well, not a long time, but we actually saw it happen before the whole pandemic crash. And it doesn't tend to occur that often. But if you notice some of the dates here, this is actually a big lead indicator that things are really stuffed. And if this happens, it won't crash tomorrow necessarily. But when it goes over these levels, you tend to see a crash in the next 1 to 2 years. So you've got to be careful of this one. And this is what the market will be looking at as most fearful. We'll have to watch this as closely as possible. It's one of my top kind of indicators that I do use, so it's definitely out there. Let's talk about the VIX. It obviously spiked up. This is the fear index. If you're trading the VIX, then you could potentially see even further VIX movement if the right things happen on the SP500 and Nasdaq. We'll go into that later. And of course, one of our big indicators here that we're going to start just discussing in the community is when are we going to buy dips? Well, this is a 50-day average in terms of percentage of stocks above or below. And in this case, we're still sitting around here. So if we're thinking about a double dip kind of scenario, what are we thinking about? Maybe the market will come back down to this 22 level. And at that point, whatever that equals on the market, for investors anyway, they might be able to say, oh, I'm going to buy that dip. That's a good level. Something to watch. Always good to be able to go back through most of the dips through time and be able to partially predict them using indicators such as this. We'll continue to follow that. We mentioned gold. It's going phenomenally. We've traded this really well in the last couple of weeks, and ever since this bottom over here, it's really been on fire. Double liquidity kind of pick up here. That there are several key reasons why this is good. If you ever want to learn more about this stuff, definitely consider doing our private mentoring over at fxevolution.com. I deep dive into this plus everything else we do, and this particular type of setup is quite good for many reasons when it's in the right spot and what you're looking for. So we saw it break down to 1870. That was fantastic. Then it went back down, hit the previous resistance, found support. That was in our previous videos. We talked about a pickup through there. Then we've breached the 1870 again and just rolled straight up to a very big fill. Now 1910 is kind of 1900 to 1910. You'll notice we had highlighted here. This is the key resistance area for gold. And gold has headwinds in front of it. I mean, it has this level, which we expect some consolidation usually to happen in. And then if it does get through, the next stop is 1960. And that's part of the reason we've liked the trade. It's got clear take profit levels and obviously issues on the left-hand side. But really, these are these nice, what we call participation phase areas. So gold at or close to resistance at this point. Be careful out there. It has started hyperextending, so we need to see maybe some consolidation or break through that. Now, a lot of people are going bullish on oil, and we've been bullish on oil for quite some time, but is it time to actually start to turn bearish? So I've mentioned the weekly 20 moving average, but also this trend line here that's held up the whole way through. So we've seen oil hold a very nice support the whole way through. These last daily candles don't exactly look that positive. We've got rejection candles coming through, another rejection. And I think if you see a movement below this $90 trigger here, you're going to see shorters come back into oil. And you might say, but Tom, that doesn't make any sense. We've got conflicts in Europe and that should spike oil. Theoretically, yes, but we've also got agreements that are potentially being made at the same time, which could really change in terms of how expensive oil is. That's obviously a political issue as well. And on top of that, it's hyperextended. So what that means is a lot of this movement has already kind of been packed in by the market. We need to remember, if we think about it, from December pretty much 6th, oil has gone from 67 a barrel to 96, 95 without really a pullback. So it's become hyper extended away from the weekly 20. And when this happens, you start to see usually some kind of consolidation. We also have seen big investment houses come out with their public calls, which have been like $150 or $120 a barrel. When you get those, usually it's time to consolidate for a period and not to necessarily run in and jump into what everybody else in the media narrative is telling you. It's more, look at the price action. Is that looking strong? Maybe not so much. Talking about things that aren't looking that strong at the moment, unfortunately, Tesla, yes, it is declining at this point. We've got the daily 20 moving average here holding down Tesla. We kind of warned about this yesterday. The problem with Tesla is it's just not showing the same bullish signs as it once was. And this is what happens with this stock. It consolidates for a while and then goes ballistic. And it's our real, plan to find out when it's going to turn around and when it's going to go ballistic. Good news is daily 20's held it down many times now, so a closure above that would be incredibly bullish here for Tesla. Some people have said, Tom, have you missed a Wyckoff kind of pattern here or anything? I'm just going to stick with the idea that this is just a little bit of consolidation here, and we're looking towards this shorting kind of potential. And I think a lot of that comes back to the weekly. Look at this weekly. So the weeklies hit the 20 moving average in terms of resistance. This is on the weekly now. We've got a rejection candle. And if we end up splitting underneath here, where's the next big buy the dip kind of zone for Tesla traders? It's going to be around that 800. And that's going to be something that we see play out more on the Nasdaq than Tesla. So I think looking at the indices, remember right now, is paramount versus actually looking at some of these stocks. You trade the stocks, but you need to see the indices movement, and then you go in and pick your favorite stock in terms of movement. Seasonality, yeah, it's not good in the next month necessarily for Tesla. And I've gone back through some history. This is not just 2020 showing this. Each year it seems to be a bit weak around this period, but look at that middle. So if you're right, and if you can pick up the right levels and we see the turnaround, Tesla could have a big middle run. Now, what doesn't look so positive is NVDA, and we have been discussing this one. Weekly close. Imagine if this closes underneath this low. We've then got effectively a tweezer on the rejection side, and that's 3 rejections actually. So they all came up to the 270. We had that trend line down. We have earnings. Earnings is exceptional. Look really good. I listened to the call. There was some pretty cool stuff in there. We love this company, but what we don't love is the price. And that's one of the things that the market is starting to question. So for a lot of traders here and investors in NVIDIA, they're going to be looking at this nervously. If you're a bull, you don't want it to look like this near the end of the week and then follow through. For traders though, they're looking for this to close around this level. And then for next week, for them to be able to see some kind of further price momentum underneath this level, because all of a sudden we know this stock moves ballistically and it could be shorting all the way down to something like our trend line. And that's maybe where we next see buyers come back in. A trend line pick would be somewhere around that $200. Makes sense, previous support. A lot of people around the 180 to 200 when we polled the community, and volume is still high. So there's a lot of buyers and sellers in here. But look at that rejection. It's certainly something that we're watching. Now, if we also think about gold again, just quickly going back onto it, the sector still has done well. But I will caution people against necessarily going crazy on it, because we are at the next level of resistance. Here is the breakout. We detailed that this week. We've moved to the level that we expect to move to, downward trend line, resistance, all of that stuff. And if it breaches through this and we get through the trend line, well, the runway here for gold is fairly significant. I mean, $40 is actually the double bottom pattern's resistance takeoff. So that or even higher. Continue to watch gold, the metal, but the sector is one of the best of the week, and that's why we bring it up. Sector rotation is key whenever possible. Let's move over to ARK. Not so good. And it doesn't get any better for Cathie Wood here. Unfortunately, the daily continues to really be the issue. But good news is we're starting to get a very predictive moment when ARK will turn around. And that all comes down to this daily 20 moving average, the red line, the trend line down, and we're still in consolidation. Still large volume. Unfortunately, all the companies are not really reporting exceptionally, or they're being questioned about whether they're worth it. But guess what? If you have the longer term vision, not so much necessarily on ARK, but to do with some of these hyper growth stocks, there are real opportunities in 2022 towards the 2023, 2024 markets plus. And I think this is what excites a lot of people in some ways. Buying the dip, especially at these prices, could be a good level very, very soon. So here we have accumulation. We'll continue to report on this. If it gets through, we'll be there. We'll be watching as much as possible. Let's move over to the big kahuna, and that is IWM. So we've discussed the idea of Wyckoff distribution. Now, for anyone that doesn't know that, it's basically this idea of the market psychology, really kind of maximum extraction. We get max pain, which breaks out, and then a lot of people start trading it, and then they all get stuck. And it's basically the idea of maximum extraction of profit from the markets. And here we have a distribution. We've got that breakout and we've got the breakdown. This is where I think we need to be careful in the market, because we've got one leg, two legs. What if the third leg was to happen? Remember, the pullbacks have also been the same or very even in this. Now, if you get that third leg, where's the level go to? It's technically saying 170. What is that? Previous resistance 18 and 20. So in a bigger sell-off bearish scenario, considering this is a flag pattern, this could be a pretty significant thing. It hasn't gone through yet, but I would be watching IWM and using that as a bit of a barometer of health. Remember, it's small cap stocks, and small cap stocks are kind of like the lifeblood of the market in some ways. Just quick reminder, if anyone hasn't done this yet, please remember to follow us over at FX Evolution on Twitter. I tweeted this particular thing coming into the market after we saw that kind of Russia-Ukraine tension stuff going through, and we saw the dip come through. We got a nice trend line, and this ended up being pretty much the signal of shorting through the session. So always remember to watch us over there. This market is fast. So of course, to react faster, I can't be putting out a video every second, but on Twitter, we can of course post some of these things. Let's talk about the Nasdaq, because this rejection is looking severe at this point. We've got two rejections over here. Kind of reminds me of NVDA in some ways. And then we've got this potential follow through bearish looking candle coming into the Friday. Now, if the Friday closes like this, even like this, and then we get follow through next week, watch out, because we know 14,000 is a key level that people have been buying in the past. That type of candle formation is not good. But guess what? If the weekly closes and then you see a bullish weekly that closes above this, I think it's buy the dip. I think it's literally back on, because these are significant kind of formation changes should it occur. You don't always see it, but when those types of decisions get made, it becomes very successful trade. So yeah, 14,000 at this stage, it's hard to be bullish in the market. This looks bad. Of course, the Fed may like volatility right now and not have to necessarily do too much around the rates. So it all plays into the game. And this market is not looking positive right at this minute. If we go down to something like the 15-minute chart, you'll notice it closed on the low. And if we're talking about the US 100 in terms of the futures, this is why I say that trend line was quite good, because if you think about the trend line, and then in the Discord community, so which you can join for free in the links below if you want to get into the public one, many of them, shout out to them, were lining us up into the market looking for the bearish or bullish break. They had no real favor either way, and they went bearish obviously through the break, and they went further bearish here. That's good trading. That's well done, and I've got to say well done to the guys in there that are controlling that room at the moment, because it's a great community, and that type of trading is very good. I like it a lot, and well done to them. Let's move over here to the SPY. Rejection, and another rejection. Ooh, ouchie. That's also bad. I mean, that's a tweezer rejection. And if this goes bearish and closes the week, again, we don't know it's going to. I don't see positivity here. The only positive signal that could really happen at that point is we bullish break, close above. We don't know that's going to happen. So at this point, it is mostly bearish plays. Even rallies could be ripped in terms of sold off. If you take a look at the daily, it's turning around. This comes off the double top here on the SPY on the SP 500. There's the support, there's the resistance that we definitely talked about this week. We've filled the gap now on the way down, so that's kind of done. And now we go to test the 425, 430 area, which is down here. A break below that will get us underneath the 50 weekly moving average, and I mean that is significant. If you get under that, which is around here, It just doesn't happen very often. So we'll keep going back to that one. That means we're looking for literal accumulation bases, and we don't exactly know where the market's going next. It could be 400 or even 380. And that would line up a little bit with that IWM Russell discussion. Let's talk about the Friday though, because it all comes down to options in some ways. Where do we have big supports? Well, we know there are a lot of puts here, and it would be probably in the best interest of Wall Street to try to not close it under like a 430, 425. They managed to extract a lot of calls out of people trading NVDA and other positions. So I think they'll be pretty happy about that. But somewhere in here, you don't really expect the market to just tank all the way through like a 430, 425 in the next sessions. It seems unlikely. There's a lot of puts still here ready to expire. So just remember, 425 is the biggest one at that point. Let's move over to Bitcoin. Crypto markets, not so good. So along with the real stock market, if the stock market's falling, the crypto market tends to be going with it at this stage. It's not like gold from that aspect. And we've had rejections off our 46,000, which we've always been worried about. We then rejected the pickup in terms of this nice bullish movement. And let's go over and have a look at the weekly, because this is where all these markets get really scary. Everything's rejecting. There's the rejection. Here's the follow through. If that doesn't go bullish, and it looks like this coming into the close, all of a sudden, Bitcoin's looking bad again, and it could move all the way back down to 30 quite easily, 32.30. That's not good. It's a double tweezer style top if it closes like that. Remember, it is a weekly, it's not closed yet, but we knew this was a fight zone. And if they'd gotten it through here, and even in the future, if they get it through here, the FUD is gone, and bring on the FOMO, because that is the FOMO stage, and you would be very excited with yourself at that point. But at this point, no. Let's go over to Ethereum. It's just not good. It's not good. And it looks similar. I'm watching Bitcoin more than Ethereum just because we know Bitcoin rules the market, but it's another rejection style. And if we go to the weekly again, it just doesn't look positive. We saw the first stages of recovery. We hit the resistance or around that level, and then we've rejected twice now. A follow through of that rejection. Could we be going to even new lows? That's the question that I'll ask for today. So what are your thoughts about the crypto market? Do you think that's going to new all-time lows? If you think the stocks are going to new all-time lows, let us know. But if you think they're going bullish, also let us know. I'm interested in everyone's opinions in the comments section. Please remember to subscribe if you enjoyed the video, and of course smash that like button, and we'll see you in the next one. It's going to be a really exciting, really year, but certainly a couple of months. Bye for now.